Good evening, I'm Giuseppe Basile, I'm the analyst in trade. You can find at the website fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Wednesday, December the 18th, 2013, and in this video I'm going to review for you major forex pairs: the pound versus the US dollar, the Australian dollar versus the US dollar, and the US dollar versus the Canadian dollar, and the New Zealand Kiwi versus the US dollar. So let's what I want to say is that this video is going to be distributed only to my free newsletter subscribers. So if you want to receive this video, you can go to my website and subscribe the newsletter for free. Just takes a few seconds to do that, and you can receive these videos, weekday updates, plus the weekend review on your in your mailbox. So let's start from the pound versus US dollar here. As you know, in the last few weeks I've been looking at this trace, which is what Program Trading has been looking at from highs to highs. So it's an extension, has two targets, 164.54 and 167.70 area here. We got participation at 158.46, and this pushed higher prices for more than 3 weeks into this first target, 164.54. Price corrected, profit taking from that level, and then today we had this push higher. But again, when price got into this 164.54, we got profit taking again. Now of course this market can continue higher. We still have this outstanding second target, 167.60 area here, but I also mentioned another scenario, and actually possibly the possibility for this market to correct into the next measure move higher, traditional measure move at 160, and this is still possible, although market can continue higher. So unfortunately there is not a lot to act here at the moment, and probably you should not be acting on this market because this has been moving higher on emotions and high frequency HFT, high frequency trading algorithms here, and programs pushing during the day this market higher. We should either wait for 160 or wait for the second target of the larger move at 167.70 being hit here. Moving to the Australian dollar versus the US dollar, as I mentioned to you the day before today, actually yesterday, we saw prices below this low, below this 0.8908, and then I mentioned that we could actually see the second target. Actually we saw this second target, 0.8816. Look at how powerful are these levels. We got profit taking as soon as price got into this. So now we can actually have a better level to watch, and a high probability setup for this market. As I mentioned excuse me, as I mentioned yesterday, we now have the new setup short at 0.8905, and that's where we should see participation lower. So a very simple trade here would be to sell just below this 0.8905, maybe 0.89 or 0.8901, and put a stop above 0.892627, and that would be a potential good swing trade for this market that could bring market into 0.8779 and 0.8714. So this is where the opportunity is. Is nowhere else. And if price goes above 0.8927, then we could see a larger retracement. But with this market and this price action we see here, I do not expect, everything can happen, so I do not anticipate that 0.8927 to be pierced here on the upside. So we have a market moving lower, and I just want to remind you very quickly that the target of this market is 0.85, so we are still some way to go. And as you can see here, today we printed lower lows, which actually adds to the case of seeing even lower prices and having only a shallow retracement here into 0.8905. Moving to the US dollar versus the Canadian dollar, you will remember that I've indicated one setup that worked very well, and we got a free trade as well out of this trade. Let me trace it for you again. And a free trade means a free risk-free trade, meaning that if we take half of it at the first target, which is the first the first when price actually reaches a level that equals our risk, then we get a free risk trade. And not only we got a free risk trade here, we got a 5 reward to risk trade into with price moving into the first target 106.04 and second target 105.73, and after that, as you can see here, that level was touched, and I was expecting a retracement. I was anticipating a retracement to this level here, 106.33, but actually due to the FOMC and emotional trading and high frequency trading participating to this move, we broke this setup. But actually I told you that we could exit with a break-even, even a small gain here. So always be very, very careful when we have these high emotional, high volatility days, because what is a proper setup could be screwed by price move. So be very, very careful these days when there are no big news around. I mean, we can trade these levels, and they work beautifully, as you saw before, and as I hope you are start realizing here. Finally, I want to provide an update on the Kiwi. Nothing really changed here. We have a market that I believe it's going to continue to move higher, and we had recently, if we trace from lows in June to highs in October, we can see here that 81.10 acted as a support, and actually the sequence of measured move lower is broken, as we can see here. First measured move 0.8854, price getting into the first target here, and second measured move, or subsequent measured move, failing, as you can see here. And when that happens, then program trading is actually that happened after a reaction from a level of support here. So I still think that we can see, and we should see, higher price in this market. Now, as you can see, the day of today, you can see that we broke this level, so there is still a possibility that we actually retest this 81.10. And so if we get there, we will use again the Fibonacci Stochastic technique, timing technique, to time this market and bring it to the first target 0.8745. The market could just continue higher and get into this first level 0.8393. So it's not a simple trade, this one, and one of the reasons is also because this market has less volume when compared to the other majors like the euro dollar or the pound versus US dollar, and so traces are less reliable sometimes. Now you could also make the case that this was another way all the way halfway retracement here, so this could add to the strength of bears here. So it's really not easy at the moment to analyze this market. And we have longs participating at November's lows here, and shorts participating at these highs in A313. So until this stalemate here will be resolved either on the upside or on the downside, this market remains risky. But there is definitely a possibility of a short case as well. But bear in mind that the short case will have meaning only if we move below 80.09 here. This is it for this video review as well. I want to remind you that this video only goes to my newsletter subscribers, and tonight I've reviewed all the markets, so this is the third video of my video review, and you can get this video by subscribing to my newsletter. I will not share this video with my blog readers tonight. Typically I share these videos with a few weeks of delay. Thanks a lot for your attention, and I wish you a great day tomorrow and a great and relaxing evening tonight. Bye bye now.